Good evening everyone and welcome to Range Bar's Dynamic Channel System. Today's webinar will be dedicated to Range Bar Dynamic Channel System, and it will explain the rules that you can actually combine and start trading this very interesting system. I have created this system in order to introduce you to the power of range bars. And the thing is, it also uses Heiken Ashi candles that are very, very effective with range bars and moving average that will also be your filter for an entry. The system will be available for both trend and counter trend traders. And if you have any questions for the system after the webinar or whenever, please let me know. As always, you will receive the indicators and the template if you ask for it. So be sure to send me an email and I will make sure that you get the indicators. This system is mostly suitable for intraday swing trading. So it's not for long or mid-term swing trading because it uses 6 pip range bar candles, and you actually could swing it from the top to the bottom, but you need to know the rules that I will explain during the webinar. So before we begin, as always, our standard disclaimer explaining that online educational materials are available by Admiral Markets Estonia for a global audience. So take into consideration that information is not suitable for everyone. To get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Final part explained that Admiral Markets will take no responsibility for information accuracy. This is solely my opinion, and have in mind that Forex is risky business, so this webinar is for informational and educational purposes only. Okay, Admiral Market Supreme Edition, you know all about it. You can download by logging into Trader's Room. If you're still not sure what Admiral Market Supreme Edition is, I have covered it during some webinars, and you can watch it. It's a must for a serious Forex trader. You probably made a decision to place a new deposit, and you could have made like up to 50% of deposit bonus. And please check this web address for web trader platform. Don't forget that Admiral Markets is officially best MT4 broker, regulated fully. So today, range bar introduction, advantages of this system, installation, indicators explained, and how it works. Okay. So range bars were developed in the mid-1990s by a trader named Vincente Nicolelis. You probably know a history, and it started back in 1990s when we didn't have so developed platforms. Internet was in the beginning, so basically that was a different time for trading. But the thing is, range bars is not something that was used by a lot of traders. It's something that he wanted actually to exploit the volatility. So range bars is something that is volatility based. It's not like standard price action. It's based on the price itself. But the main purpose is to capture the volatility. As you probably know, or you don't know, Renko is something similar, but range bars is actually different from Renko, because traditional Renko will not show wicks, it will only show bricks. For range bars, they show wicks also, so it's very important to know it. Okay, and especially during times of big volatility, you will see a lot of bars printed out on the chart itself. When there is no volatility, less bars will be printed out. So we can say for range bars that those are also volatility price action that is volatility price action indicator. It's completely different dimension compared to price action harmonics or indicator-based systems such as EMA crosses and so on. So it's different, guys. And you will see it. Each range bar must have a high-low range that equals the specified range. That is the primary rule for a range bar to be printed out. Each range bar must open outside the high-low range of the previous bar. And each range bar must close at either its high or its low. Okay, so those are the rules that you need to check in order to see that a proper range bar has been printed out. Fortunately, there is an indicator that will print out based on offline charts, and of course you will get the indicator itself. For example, we can use 10 pip bar or 25 pip bar or 5 pip bar, 2 pip bar, whatever you see fit. For example, if you use a 10 pip bar, that will print out new bar every time the price moves 10 pip up or down. So here you can see 10 pip bar, range bars going up and down. It's different compared to traditional candlesticks. So you can see it clearly here. Every time the price moves 10 pips up or down, it will print out a new bar. Here, as you can see it, it's going up and then it reverses to the downside. But it's good, okay? And you will see why. There are some filters we need to apply in order to trade it successfully. Advantages of range bars are definitely big. There is no noise compared to traditional candlesticks. It's much easier to spot different patterns. The price completely negates the movement of time frames. It doesn't matter. Time is non-existent on range bar charts. Remember it, guys. Time is not existent. We only see the price movement. We don't care about the time. Let's compare two charts. This is M5 chart and this is 4 pip range bar chart. You see how it's different. It's totally different. So the thing is, you cannot use range bars for analysis. Range bars are strictly used for trading. I never seen an analysis like, let's say, we do on range bars. It would be a bit awkward, right? Maybe there is an analysis, but I don't know about it. The only thing I have witnessed so far personally is trading, concrete and precise. Okay, so this is pretty much, let's say, mechanical trading. Because when you trade price or when you trade price action system that uses also some indicators, you need to know that it's actually, you always apply that price action knowledge, guys. But this is different. Range bars are different. Price action in its standard sense does not exist. So remember, this is a system and you use it solely for trading, like a system. Not for analyzing the chart, not like we do it on price action trading school. So this is a system. Okay? You place a trade, put a stop loss, put a target in, you can manage your trade. Okay? So it's completely different from analysis templates, analysis charts, and so on. Remember that. The system uses both setups, trend-based setups and counter-trend-based setups. Okay, this is basically the same installation as for Forex range bars regression. It doesn't matter. The installation is always the same. Go to File, Open Data folder. Put indicators in MQL4 indicator folder of your MT4. Put the range bars expert advisor into MQL4 experts folder. Put a template folder into templates folder. Okay? And the process which shows range bars on chart is pretty simple. For example, you will trade euro dollar. For example, you need to drag range bars from experts folder to euro dollar 1 minute chart. Then in settings, put range bar 6 and time frame 6. Go to offline in your MT4, open euro dollar M6, apply the template to the chart and have it running. And the range bar script should be run only on 1 minute chart. The indicators that we use are these: regression, Heiken Ashi, fractals, and slope indicator. I didn't put a slope indicator, but I will explain it on the chart itself, because that indicator is based on moving average and it has colors, so I will show it. So regression is actually two parallel lines that will make up for a channel. We use 2-degree regression because 2-degree regression will make channel more steady. 2 standard deviations will make it more suitable for rallies and dips, and more suitable for intraday rallies, guys, okay? Especially for intraday rallies. And not just rallies, dips also, but the range that you can trade is a bit higher compared to standard channel-based systems. Regression is adaptive channel. So that means that you can see repainting. But repainting is not seen when you use 2-degree regression as we will do it. If you use 4 or 5-degree regression, this indicator will have more curves, but it will adapt more to the past, so you will have problems when you go back in history and check how it behaved. So the thing is, we use it on simply on as 2-degree regression. So it's important to notice. 2-degree regression will make channel more steady. You can check it with historical shift setting, and that is what I will also explain. Heiken Ashi are color-coded candles for pullback, trend, and momentum. It's ideally suitable with range bars. Also Magdi in color. It's used as filter, green for long, red for shorts. 122697 is the default setting of this Magdi indicator. And this is how it looks like. This is the slope line, and I will explain how we use the slope line on the live chart. This is the upper part of the channel. This is the middle line. This is the lower part of the channel. This is Magdi. Simple, guys, very simple. Okay, and these are fractals. Okay, sounds interesting, right? I think that you might like this system. So I will explain the rules on live chart. This is how it looks like. And let me just correct this. I need to correct the screen. Give me a second. Okay. Yeah. Here it is, guys. This is how it looks. Okay? So how we actually use and put the template and indicators on. So first, you need to have all the indicators in your file, data folder, and here, guys, MQL indicators. This is for indicators. This is for template. So you need to install it there as I've explained. Okay? Now, if you want to use it, let's say on euro-dollar chart, it's very simple. Go to File, then, okay, well, let's use like this. New chart, euro-dollar. I'm going step by step. And this should be run solely on 1 minute chart. So like this, 1 minute chart. Now you need to put this script. Okay, so this is actually Expert Advisor. So Expert Advisor goes into Experts folder. Put here 6. Put here 6. This is the same. And place OK. Okay, so you just let it run for a couple of seconds. Or press Home, press End to actually load more of these bars. See, so this is where you will put Expert Advisor. So Expert Advisors that I will send you, it should go into MQL for Experts folder. Now what you should do is File, Open Data folder, open offline, because you entered 6. You need to find euro-dollar M6. Okay, euro-dollar M6, let's see, this is it, euro-dollar M6. Put a template, okay, and template is actually, okay, I will send you the template. Okay, it's range bar dynamic channel, and voila, here we are, the template. See? Now, guys, the rules for trading. This is interesting. Okay, rules are very simple. But be sure to check this indicator. Regression. So 2 polynomial degree, 2 standard deviations, 500 bars, and if you want to test how channel looked in the past, just place a number here within historical shift field. If you place 50, for example, 60, doesn't matter, whatever, you will see how the channel looked 60 bars ago. Yes, Nathan, this is like curve fitting, but because we use actually 2 polynomial degree, it is not repainting as other adaptive channels or curve fitting indicators. If you would use it like this, okay, let's say I will use 5, you will see what will happen. So that is why we use it like this. And you can check it like this in the past, like 60 historical shift. See, you can just, and it's very accurate, because here you can see that there is, you see, it's very, very close. But you see what will happen if we actually do it like this. You see, and repainting will be much higher, guys. Repainting will be much higher, because when you do it, let's say 60, you see, it's totally different. So 60 bars ago, this looked like this. Guys, this is not tradable. This is, I don't like this, really. Because of that, we need to use 2 polynomial degree. The bigger, yes, 2 polynomial degree. The bigger polynomial degree, it will have more curves, and it will adapt more in to the past. And that is called repainting. Because when you look at it, it will look simply perfect. It's not perfect, guys. There is no indicator that it will give you such a perfect trades like this, right? So it will fit into the past. Because of it, we use 2. Okay? And now it's much better here. Okay, here, see, 60 bars ago it looked like this. It was still good to actually trade it. See? Because it was very, very close to this channel line. But the thing is, if you now use it here as 0, you'll see now, you see, it actually adapted to the past, but not much. That is why we have other filters to filter out the curve fitting. There is no time frames, Kuram. You didn't understand this. There is no 15-minute, 4-hour time frame. This is range bars. Range bars do not use time frames. Okay? So no time frames here. It's M6. That means all of these range bars are actually 6 pip. So no time frames here. Forget about time frames when you trade range bars. It doesn't exist. Okay? It doesn't exist. So how we trade this method? Now, there are 2 basic rules. The first rule is we want to follow the channel. The second rule is we want to trade both ways. Of course, guys, the channel curve will give you the trend. So because this channel goes down, we know that the trend is to the downside. So if you want to follow the trend, you will only take short trades. If you want to follow a counter trend, then you need to actually trade it both ways. So you can actually trade it both ways. So that is up to you. Well, if you will trade it both ways, so you can do it. And the thing is, you can practice it. So first, be sure to practice it on demo account, and then you can move on to live account. First rule, candle needs to be, or hit, it needs to be very close to the channel top or hit the channel top before you make a short entry. So that is the first rule. So let's see how it looked in the past. Count this. Guys, follow me now, because you can also test this indicator, how it behaved in the past. Let's count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 7, 8, 9. Like 40, okay? So this is how we do it. So 40. So 40 historical shift. Okay, it's actually, okay, let me mark this. I want this. Okay, but it's very close, okay? So we can make it like 39 here. Okay, excellent, guys. You see, 38 candles before, 38 candles prior to current price action, we had a touch, the touch of this channel top. Okay? See? This was the touch here. So this is the first rule. The second rule is Magdi needs to be red. The third rule is slope needs to be red. Okay? I have basically, I I used the $CAD, maybe not in a good time because there was some news for CAD. It's actually overnight trade. So the price may be a bit whipsaw at this point. But let's see, according to the rules, this is where we had our short trade initiated here. So actually, this made initially 10 pip, okay? So initially 10 pip has been made. Maybe we will see another short signal, but at this time it had 10 pip. Let's see a long counter trend opportunity. So 38, 39, 40. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 51, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like 60 to 70. Okay, like 60 to 70. Let's see 70, for example. See, guys, we can also think that this is a hit because you won't be having instant signal. You need to wait for the rules to comply. So here we actually made our long trade. See here. Okay, no. Here, there was the rule. See, this was the rule for a long trade. Okay? And initially, it was good for 30 pip. Okay? So 30 pip, guys, you see counter trend trade opportunity. See? So actually, it was the signal came, no, here it was the signal, like this candle. 30 pip. So not bad, right? Because guys, what I told you initially, well, this is both trend and counter trend. This is a intraday swing system. So it's different compared to the analysis. It's a system. So you basically trade it up and down, making swings. But please do not overtrade. Let's see this signal here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 80. Let's say it 90. Excellent. Look at this. Okay, we had almost a touch here, or it was very close. Maybe it's 100. Okay. Okay, here we had a touch. You see? A touch, and the signal showed in here. Here, this was a signal to actually go short. Look at this, guys. Do you like it? I think that you might like this. Count the pips here. 56 possible pips. Okay? Very interesting, you might say. Yes, it is, because you know that I'm a fan of range bar trading, and I really try to experiment with it, and especially because there are also there are always new traders who join up, new traders who want to try something different, and here I am, always trying to show something new, different, and stay in touch with current market conditions. So guys, very clear rules, very simple rules. Now I will cover targets and stops. Before that, if you want to have this system with indicators, okay, and with template, send an email to me, tarantulafx@gmail.com. I will send you possibly during maybe the evening or tomorrow, and this webinar is recorded. It will be uploaded, so you will have the possibility to watch it again and again, how many times you wish. And of course, guys, don't hesitate to ask any question if something is not clear. So this is a simple range bar system that is suitable for both advanced and new traders. Okay. Now the rules for stops and targets. We use fractals, guys. So if we want to place a stop loss for a short trade, we place it actually 5 pip above the fractal. So here you see the height, the fractal is at 1.3133. We place it at 1.3138. Okay, so that is where our stop loss is. Okay, here you can see it actually. The low was 31.07. So for this trade, you will have 31 pip stop loss. Calculate your risk, because your risk is always up to you and your account. Now, a lot of people always ask me, what are the rules for a proper risk management? Now I will use this opportunity to tell you something, guys, that will be important for you forever and ever, okay? As you know, I trade and I have 5 different accounts with Admiral Markets. That is the only broker I trade, and the thing is, you're very, very safe with Admiral. So we don't need to mention it all the time. It's the fact. Now, all of those accounts are different. Most of them. I have a bigger account, not that big, but it's bigger account. Started from 10K, raised to 15K, then moved to another account. Now it's like 20K. It's like 40% in profit. I also have low to high account that I've shown you on EQ on various blogs that I managed to bring from 350 to 2,800 at this point. Okay, follow me, bear with me. I also have one account which is in a slightly drawdown. It's like 20% of a drawdown. Okay? So now why I'm telling you this? To actually know the fact, the risk is always up to you. Okay? I cannot tell you guys risk 0.5% per trade or risk 5% per trade. It's my job to actually teach you how you should trade like institutions do, with low risk. And I can also show you high risk trading. But it's up to you. Okay, it's up to you. So please remember that, guys. Remember that. You can be a low risk trader on one account and high risk trader on another account. It's solely up to you. Because if I tell you make 2-3% per month, it's good, because you are doing better than banks and you are doing it like a low risk, right? But maybe you won't be happy with 3% per month, because obviously if your account is 300, 500,000 euros, well, 3% is nothing, right? It's not much. The satisfactory thing is, if you put 1,000 euros in the bank, you will be, at the end of the year, you will be 1%. Okay, you will be up 1%. It's very small return of investment, ROI. But if you trade with a lower risk, you can make it 2 to 3% per month. Now, obviously, if you have 50K account, it's much better to trade with low risk, because it's still good money, right? Making 2 grand constantly per month. It's good, right? Not bad. But of course, if you have 5K account, what you can make is like 5%. It's still not much. It's actually 250 euros. It's nothing again. But you have one big truth with your trading is that you still made more than you could have made by placing it in the bank, right? And you made it like for, like, let's say 5 years. You're still 5 times better than the bank. Because of that fact, guys, you need to make your own risk management rules. That is, I'm using my own experience as a guide to you. You can do it as I do with higher accounts, and on lower accounts you can try to trade with a bigger risk, but it's solely up to you. Until you master risk management, not necessarily master, but until you are very familiar with risk management, you should trade on demo account, test the strategy, and then move on to live account. Okay? So no other rules, guys. No thinning histograms, nothing. The rules for this system are as it is, as I am explaining. Okay, as I am explaining at this point. Those are the rules, and you should follow and abide the rules. Exit rules. There are a couple of different ways to actually exit. Okay. The first rule for exit is, as soon as the price touches this middle line, you can exit. The thing is, if you don't have enough room, okay, here it's like 20 pips, so it could be okay. But if you see that there are less than 10 pips to the middle line, you don't exit there. So your exit is actually the touch of this lower bottom line. So it can be here and it can be there, very close or at this bottom line for short trades. Okay. Also, you can follow Heiken Ashi candle and exit when blue candle appears. Okay. That is how you exit. Stop losses are here. Same for long trades. Okay. Let me use this. For long trades, guys. So here you see we had entry that is higher than this middle line. In that case, you want to exit somewhere here. Okay, and you can see it's like 27 pips. Stop loss is here. It's like 19 pips. 5 pips below this fractal. So it always depends, okay, where these lines will go if you follow the channel of how this, the color of Heiken Ashi will show. So if it starts to change the color, if it closes with a color change here, you can also exit. So you see, very simple rules, and I think that you should give it a shot. Now, guys, if you have any questions, do not hesitate to ask me. Send an email. I will prepare the zip file or RAR file. You can unrar it and put it on your own chart. So let's see if there are any questions for this range bar system. Okay. Nathan is asking, you get number of bars with RNS. Nathan, what does it mean? You get number of bars with RNS. Papa is asking, will we get indicators and templates plus rules? Rules are here on the live chart, and if you are not sure about the rules, please watch this webinar again. I will send you the template and indicators. If you send an email request to me, I will send you, of course, the package No problem. Mathieu is asking, is an exit? Yes, this is an exit rule. So as I explained, very concise. Okay, so that is how you manage a trade. So you are following this channel basically. Okay. There another question? Is this webinar being recorded and will it be uploaded? Yes, guys, of course, as always. Mihai is commenting. Thank you. Amazing pure price trading. I will email you now. I will trade it tomorrow on euro dollar. Sure, no problem, guys. Sean is asking, you only trade this in the opening of London and New York market. Well, you can trade it during the first 3 hours of each session. Sean, it means the first 3 hours of London Open and or the first 3 hours of New York Open. I haven't tested the system during Tokyo simply because, well, you know, Tokyo is the time when I need to sleep because I'm always early with my analysis, so I really need to sleep. And you can test it and see how it behaves during Tokyo Open. So only that. Otherwise, as I was telling you, use it on during the first 3 hours of London session and the first 3 hours of Tokyo session. So it should be clear, and you should not be worried that there won't be movement, because the advantage of range bar is actually, as it says, the main advantage is it follows volatility, and without volatility those range bars will not be printed out. So that's actually a good thing about these range bars, because those will always follow the volatility. Okay, no volatility, no range bars will be printed out. Okay, so that's it, guys. Of course, again, this is how you test the indicator. In the past, when you press 0, it basically is current price. Nathan is saying very interesting. Okay. No, I don't trade Renko. I'm a fan of range bars, not Renko bars. Really, I'm not into Renko. So I know about Renko. It's a bit similar, but I don't know. As I'm telling you, I prefer range bars to Renko. Okay, guys, I don't see any questions, so we can call it a day. For what we use Heiken Ashi. Mathieu, Heiken Ashi is, as I was telling you, for both trend and momentum and the price. When price hits the bottom line, you first need to wait for blue Heiken Ashi, Magdi green, and blue slope channel. Then you go then you go with a long trade. You also use it for exits. So if you want to follow the exit per Heiken Ashi, you exit when Heiken Ashi changes the color. So Heiken Ashi is always good combined with range bars. So that was it, guys. I don't see any questions coming, so I'm assuming that everything is clear, concise, and well, guys, if you have any questions, please make comments, send me an email. If you like the system, like it also on YouTube, as always. And yeah, I will be here with you soon. Be ready for new analysis, as always. And we will make new pips, fresh pips on Monday session recap. Until tomorrow, guys, cheers and trade safe.